Hello and welcome. I'm Arjun Vishwanathan and I'm going to be your host today to discuss matters around reform, innovation, and value acceleration in the BFSI sector from a global perspective. And without further ado, to carry this conversation forward, please put your hands together to welcome Simone Martin, former Deputy Director, Angular Financial Services Commission. Simone, welcome, and we are delighted and privileged you could join us.
Thank you so much for the invitation. It is a great honor to be invited to offer my views at FinNext 2022.
Thank you. Syed Mushir Ahmed, Managing Director, FinStep Asia. Mushir, welcome and equally delighted and privileged, sir.
Thank you so much, sir. Arjun, it's a pleasure to be here and join such wonderful thought leaders as Simone and Constantine here, along with yourself. Thank you.
And last but certainly not the least, Dr. Konstantinos Sanis, Digital Transformation and FinTech Industry Specialist, the International Finance Corporation. Konstantin, welcome. We are equally delighted.
Hello, everyone. Super excited to be in this panel and try to share knowledge and experiences on how technology is transforming competitive advantage in the technology sector.
Thank you.
In the financial sector, sorry.
Indeed so. Ladies and gentlemen, this is truly the next 30 odd minutes promises to be what I'm looking forward to being fascinating. And I'm going to directly jump into this. Simone, with your permission, if I could come to you. If the last 24 odd months have been fairly trying on all of us, including industry, but if there have also been significant learnings, challenges, and yet there have been opportunities. In the BFSI sector as a whole, at a global scale, what do you think have been some radical changes that have come about with the aid of technology that perhaps may not have happened had the pandemic not behaved as a natural catalyst?
Well, thank you for that question. I think it is quite profound, and it will be a case study to reflect on how quickly we can adapt when we're forced to in all areas of life. But as it relates to the BFSI sector, one of the things that really stood out for me was how quickly both service providers and customers had to transition to embrace the use of technology more, especially when movement was restricted. One of the other areas that I also took very careful note of is that regulators had to redouble their efforts to respond. Certainly, you did not want to interrupt businesses from providing the services that they were providing. But what also happened was an acceleration of frauds and other scams. Now, criminals tend to be also early adopters. So that got the immediate attention of regulators globally. But as we move forward, several things that I saw within the regulatory community, we took the opportunity to actually use the technology to have broader discussions that would not have necessarily happened at the pace and scale and the depth of regulatory authorities that may not have happened because of the crisis. Now, Winston Churchill is famous for a lot of quotes, and he has a quote of never waste a crisis. And so regulators definitely didn't waste that crisis, nor did forward-looking innovators in the BFSI sector. One of the other elements that I saw was that persons and businesses were very focused on making sure that they maintained and actually expanded market share. So that was another thing that businesses were looking at. And the progressive ones also didn't waste the crisis, seeking to expand their offerings using technological solutions. So just as a broad snapshot, that is some of the issues and learnings that came from the last 24 months, to be certain. But I'll leave it there for other interventions.
Of course, indeed so, because Mushir, if I could come to you and I could bring that forward, increasingly, one of the challenges, yet the opportunities that BFSI as a sector has faced is the ability to garner, the ability to bring in net new subscribers without the advantage of a physical touch point. But in many ways, that's actually been a boon because they've been able to optimize costs. In your view, how radically has the whole customer acquisition space or the ecosystem or the process of the journey, if you were, changed and perhaps become easier for the BFSI sector to capitalize on acquisitions across segments?
It's a very, very good question, right? And I think there's no easy answer to this, or straight answer. I would say that the journey that the banks themselves are taking is on a spectrum, right? As is always the case, sometimes you have some of the leading neobanks who come with a fresh perspective, new technology, aren't burdened by legacy technology or legacy processes, who are able to provide this quicker and acquire quicker, right? But they also, one thing that most people forget is your the story about you are the circle you keep in terms of the personality you build is something that people don't realize that exists in the corporate and the startup world as well. A lot of startups tend to work with startups because the culture is similar, the timing, there's a lot of match both from a technology, there'll be cloud native, etc. While when we look at banks, they tend to be with much bigger corporates, slower onboarding ramps, and so I think that element is being highly disruptive now, because everybody realizes that it's no longer a flash in the pan to be a fintech, and that engagement that they have. A lot of fintech models were extensively focused on user acquisition, right? And offering freebies, cashback, sometimes 2x of whatever you've bought for, to essentially bring in customers. But ultimately, it is, as you rightly said, is the customer journey, the customer experience that keeps people loyal to your platform. Incentives can only go so far, right? You could give somebody an incentive to come to a certain place, but if the place is crappy, people are going to leave
Every
eventually.
nation has only finite wealth. We cannot
Exactly,
pay
right.
more than what we earn.
Well, that is another debate that could last for hours about whether that applies to VC funded startups and
course,
where the finite is, where the finite resources come, not just in India but across the world. But what I'm coming back to, I think, is those journeys are being disrupted rather, because people now have something to compare to at scale, right? The ability of an app store, which wasn't there significantly many years ago, but the maturity of being able to easily build something on an app store, right, from anywhere in the world, provides even small young startups an opportunity to compete against big names, just based on the customer experience. And because you can have partners, you don't necessarily have to have licenses like neobanks or neo platforms. You can then take a jump on the banks who may prefer to build from scratch, and that takes a longer time, and then come up to, because one element that most people focus on is saying, hey, you need to give customers an exciting journey, a new journey, make it ease of access. Agreed. However, the word that most people miss is inertia. What about the bank's existing customers, especially on a B2B platform versus B2C? They are used to certain ways of functioning, right? Most people don't switch between brands for phones. I don't know, people aren't buying Samsung for 2 years and switching to an iPhone for 2 years, if cost being the same, because they're used to it. It's inertia. It's the same with laptops. It's the same with banks, and the same with services, right? So people don't like jumping too much. So you need to improve that existing customer experience. And with open banking and APIs, you're now able to at least bring in newer elements, which banks earlier were not able to, because their partners were not as tech savvy or tech enabled, right? Now with the right regulatory push, you're now able to, sorry, go on, Arjun.
No, please, because I think what you just said was very, very interesting, because Konstantin, with your permission, if I could bring that to you. Mushir just spoke about the fact that, customer and consumer preferences today are very dynamic, and perhaps in a sense of the word, shifting in ways that we've never imagined that. In your view, really, and my question to you is, with the aid and the benefit of technology, Konstantin, is there an ability to craft and create or orchestrate such experience for the consumer so as to be able to build loyalty in fashions that financial or fiscal incentives will not do?
Thanks for the question. And yes, indeed, technology and data is driving a very much improved customer experience. So what we are seeing across different markets and countries is we are seeing that essentially the banks are following the fintechs and the whole startup culture, and they are really prioritizing the customer experience. Traditionally, the banks have been, we are all quite, we have had some bad experiences with the banks and the insurance companies. The customer service is bad, is slow, is not really is not really, not always the problems are solved at the first time and so on. However, there are specific trends which are orchestrating a whole change in the customer experience. First of all, we see more and more banks applying design thinking for product development, for customer experience, and so on. So they are really prioritizing the customer first. Beyond design thinking principles, we also see extensive use of data for customization of products and offering, right? From segmentation in the marketing space to actual product testing using data to actually analyzing customer behavior based on data and transaction data and so on. So we are seeing more and more customization. Ultimately, we believe that that as the way forward for banking is the ability, what we have seen in other industries, the ability to customize, to offer real-time offerings, and so on. And we see that already in some markets, right? I mean, if you see in some more developed, some more mature financial markets, you can see real-time offerings. You can see that someone might do a Google search and get, and based on the keywords you use, you can get an offering from an app. So we expect as the data capabilities are improving and as the overall maturity of the bank, of the digital banking offering is evolving, we expect to see more real-time offerings. We expect to see less loyalty in specific brands and more interest on unique offering from the brands, right? So we don't think that the bank of the future will be what we have seen right now. We don't think that a customer will use a bank for all the services. We expect them, on the same way that it's so easy to open a bank account remotely and do verification through and so on. We expect that the customers will be focusing on specific products per platform, and they'll be switching, quite fast and easily. And so my ultimate response, my ultimate response to your initial question is that loyalty will be gained from the banks based on the customer experience and the products they're offering. And that's
Konstantin, that's actually very powerfully articulated, because Simone, I'm going to bring this to you. Both Mushir as well as Konstantin spoke about how customer preferences are changing. My demands as a BFSI or a financial sector consumer are evolving on a day-to-day, perhaps even on an R2R basis. And obviously, data continues to be one of the foundational pillars to be able to solve this or address the opportunities as well as the challenges that exist. My question to you is, are we leveraging data enough? Are we doing justice to the data that we have? Are we even collecting the right data?
My simple answer will be no. One of the things that regulators have seen, and I've seen personally from exploring questions through my company, is that a lot of firms are still data dark. They have data, they don't know what to do with the data, they're not using it in the best way, and in other areas, they have dirty data. So they have a lot, they know intuitively something is there that they can leverage, but they've not arisen to a place where they can actually benefit from that data. I think as time goes on, you will see that improving, and that's both for the regulator and the regulated. But just to touch on something that Konstantin made a comment about in terms of the lack of loyalty, that is something that regulators are also very keen in terms of making sure that we have protections around it. And it's not for regulators to over-regulate. I'm actually very much against over-regulation. There's something called right touch regulation, because if you're going to disaggregate banking and have banking as a service, regulators need to be focused on the activity and not necessarily as the whole. And then when it comes to applying risk and compliance frameworks, it can be differentiated to reduce the cost of compliance. And that's something that I've also written about personally in some of my blogs. But when it comes to actual products, one of the things that regulators are keen to look for, and maybe I'm telegraphing some things that I would hope to see, is that when you have these things that are being used intuitively, whether in bank or in much insurance product or microinsurance, to bring about some more of that financial inclusion, that the information that is being provided to the consumers and potential consumers is in plain speak, in whatever language. The legal jargon era, I think, is behind us now. People want to be able to digest what this particular product or service means. What do I get out of it? And if it's not clear and they don't understand it, they're moving on. And that's part of what's driving people away from being loyal to institutions that they have been with for decades. And in terms of people who are digital natives, they're used to just migrating all over the place. Those of us, and I will count myself, I was born in the 70s, that count ourselves as digital immigrants, tend to be learning, and some of us embrace it more so than others. And I'm happy that I had the influence of my father, who was a telecommunications engineer, always embracing technology to say, look at these things from these perspectives to make sure that you can make the applications work in whatever area of life. So that is what we want to offer in relation to data, the lack of loyalty and intuitive product and right touch regulation.
No, well, that's brilliantly said, because Mushir, that brings me then to an interesting question. If it stands established, and I presume, and I trust that you agree that we aren't even scraping the surface of the data, in your prescription to a new generation of IT leaders who will lead the BFSI or the financial sector to a journey or through a journey of value acceleration, will technologies or do technologies such as artificial intelligence, machine learning, are they overhyped for now? For the simple reason that we just aren't leveraging the data enough.
I'm going to quote Simone from a previous panel that we were on together. The data is no longer the new gold or new oil. It's actually the new nuclear power, right? In the sense of the capacity it holds, and a little bit of data can have so much power. And building on from there, I don't think it's under I think artificial intelligence and machine learning. If we were looking at it 10, 15 years ago, you could have still stated that the quality of underlying data and the volume of underlying data was not significant enough. Plus, you did not have computing power at scale, right? So there were these three main issues that you had. So cleansing of data was a problem, structuring of data was a problem, and then computing that or using AI and machine learning was a significant issue. However, in today's world, essentially some form or shape of data analytics is underpinning most information that we have. How impactful or effective it is just depends on use cases, right? We have certain use cases that have enabled, from live face recognition in real time to 5-second settlement of insurance claims for motor accidents in China, right? So face recognition, Smile to Pay, Alipay started that revolution, and then it's been built on. Something that people forget is our underlying telecom and data infrastructure globally has gone up quite a bit. It's exponential. 1G to 2G is not just double the speed, right? It's actually exponential. And then if you look at 4G versus even 2G, it's much bigger, and 5G is going to be phenomenally different. So I think these enabling factors need data. 90% of the world's total data has been generated in the recent past. So now you actually need strong computing engines and computing power that can actually cleanse that data and are able to deliver. So the ABCs of for technology in today's world, I'm using jargon here, but artificial intelligence, blockchain, and cloud, right? Now blockchain, artificial intelligence, the most mature of the lot. It's been around for 50 years, seen enough winters and summers. And I think this is no longer a question of season, but it's going to be all year long. Blockchain is very early, nascent, some good global scale use cases, but it's going to take another 5-10 years before it becomes prevalent everywhere. While cloud is where it's about 60 to 70% there. I think the key issue with cloud right now is just one, data localization issues for cross-border data, but secondly is just transformation from banks who've been using COBOL and all these mainframes of 50 years ago, and looking to transform that to the modern day. That's the only thing breaking. So long answer, but the short answer is no, it's not a hype. It is needed, and if a CTO does not have that, or a CDO does not have that strategy right now, take the term CDO that I just mentioned, Chief Data Officer, or something probably not very regular and probably unheard of in most companies 10 years ago, right? Now CDOs are an integral part of your business, and without data, it's a lot. If you're a startup, nobody's going to invest in you. If you're a bank, everybody wants to know how that's being done, and you have real-time data and analytics on top of that. So it is helping businesses make decisions faster and in a more better way. And there's a lot more transparency and risk management as well as you open up more data. So all in all, I think these are technologies here to stay, and their influence is only going to grow, and they're just going to be embedded in everything we do. It's no longer going to be a case of, is there AI under this machine? It's already there. We're already seeing it from a chip design perspective, right? It's being powered by artificial intelligence and machine learning. So it's real-time changes in hardware that we're seeing. So, forget about the software.
I couldn't agree with you more, Mushi. I couldn't agree with you more, which is why I'm going to come to you, Konstantin, and I'm going to ask you, as you look towards a new generation of IT leaders who will emerge to lead their financial sector organizations through the journey of value acceleration, innovation, and so much more, resilient organizations, what is your prescription for the judicious use of technology, such as is fiscally prudent, to avoid making the mistakes of trying to throw technology at everything because technology is beautiful?
So that's a very good question. And generally speaking, there are two kinds of recommendations here. Number one, planning and sticking to a strategy. And number two, training. So what we have seen, like over the years, we have seen multiple projects in different countries where essentially, there are some decisions being made from departments, and perhaps frequently these projects are sometimes not fully completed. They don't really fulfill their targets, or in other times, the users don't know how to use them. And that ends up being a revenue source for consulting companies who come and they step in and, they know how to do it, and they take over. I have seen that actually in multiple environments. And ultimately, the best advice here is what I just told you, right? Like, have a clear, coherent plan, stick to the plan, understand the implications in terms of data and architecture, because that's another issue, right? What we have seen in some organizations is when the CDO or the CTO does not fully possess the ability to understand long-term implications, there can be long-term architectural issues. I was just working with a bank, and they integrated some CRM software, but they couldn't extract the customer data because of architectural issues. So they had to go back to scratch to reestablish and to start from zero. So again, it is planning and sticking to a correct strategy. And number two, also continuous training from cybersecurity to data to IT. I think it is the management's responsibility to ensure that everything goes across in a coherent plan, and that is accompanied through good training. So these are my two pillars.
That's actually brilliantly said, because Simone, if I could come to you, we've been speaking about technology now for the last 20 odd minutes, and we fairly established the fact that technology is the foundational pillar to achieving greatness in the financial sector. My question to you, however, is, with the evolution of technology and the maturity that it has reached, do you think industry globally has the skills to manage the technology? And what is your guidance to IT leaders?
Yes, we have the skill, but it's still disaggregated. I would say one of to dovetail on Konstantin's intervention and to marry it to your question, is that one of the failings I've seen as well is that we develop these platforms, but we don't code in compliance, which causes a company to have to go back to the beginning. And that example that Konstantin gave was perfect, because if you have data, and regulators are very concerned about record retention and record retrieval, and you can't get at the customer data, you have failed your compliance. It doesn't matter what you have. In terms of where we go, it is recognizing that it's a journey all of us have to take together. So regulators, regulatory authorities are in the process of doing their own upgrades so that they understand the underlying issues that are present in transitioning firms in the BFSI sector towards being more global, more diverse, more integrated, more offerings, and encouraging financial inclusion. One of the other elements that I would like to add, and it might come across as a little controversial, in that all of this tech and data, I see as desperately calling for behavioral scientists coming in, because we're going to have to see how the data reflects on consumer behaviors, but also regulators are going to use behavioral science to detect frauds through a technological application. That is coming. And I've not read it anywhere, but this is intuitively what I see. If you have that much data to analyze, it just won't be for profit and loss or compliance or risk. It is going to go beyond that. And if we're going to have a real conversation about risks, we have to also talk about privacy. It's a big conversation in the crypto community. And so that is where regulators have to come on board with concepts such as zero-proof authentication so that people can remain private in their transactions and not be subject to persons who would want to target them for extortion or other financial crimes, but that regulatory concerns are also addressed and can be satisfied. So there's a lot that needs to happen. I think that we do globally have the skill, but it's still disaggregated and it's coalescing where it needs to be, thankfully, but I think that is taking a bit of time.
Oh, that's actually very powerful, what you've just mentioned, because I do have a view on the clock, and I do know that you've got hard schedules ahead. I've got one last question because we've got about 5 minutes on the clock. Mushir, while we've established a lot during the last 25 odd minutes, my question to you is what is your prescription and your prescriptive guidance to future leaders and also building resilient organizations in the financial sector, not just for employees and shareholders and stakeholders, but also for customers in the overall ecosystem in the interest of nation building globally?
Wow, that's I feel like a tiny
It's an
ant trying to
expansive
preach
question.
to the elephants and the lions who lead the way. But look, I think it's Simone touched upon a very important element of data privacy, etc. Right? But I would say the most important thing is responsibility. Right? At every level, be it from a regulator to government to users, it's about responsibility of how you use your data. From a company perspective, it's enabling the owners of the data to access their own data, right? So from a bank perspective, opening up that data for ownership. From a regulator perspective, taking responsibility to build and inculcate an innovative structure in a competitive environment rather than trying to put silos and blocking startups. From a startup's perspective, you want to monetize, but be responsible in how you use the data and be transparent in your data usage. So I think that's very, very important if you're going to talk about building towards it, because once you have the responsibility towards your other side and the other stakeholders, you naturally then are building something that's for the common good. And that helps not just nation building, but community building at every level. So I would say responsibility is where it is. Thank you.
No, brilliant. And Konstantin, if I could ask you in conclusion, looking at the last 2 years, and if you were to be able to peer into the future with the aid of technology, what innovation can the financial sector expect globally, such for the betterment of course, society as well as consumers?
Look, I think the biggest innovation in terms of technology that the last 2 years has happened is that the ability of in the banking sector to start really thinking remotely. What do I mean with that? Like now there is a whole shift that a lot of banks around the world really established digital ID technology, and digital ID has to do with data and the ability to really do compliance remotely. This also touches, on the fraud that Simone mentioned earlier. And so essentially, I think the proliferation of digital ID will really help remote transactioning, remote verification, remote data usage, and everything. So it's not exactly a new technology, and within the World Bank and the IFC, we're advocating it for a long time, but it really proliferated the last 2 years. And I think, it is a key milestone in the whole digital world, the actual efficient implementation of digital ID across countries. Yes, so this is
if I may be allowed to ask you a personal question, Konstantin, if you were to look back at the last 2 years, one personal learning that's going to stick with you for a long, long time, to know the man behind the technology and the success.
One personal learning is that no matter what how big we anticipate changes and what's happening, and from the war in Ukraine to COVID to other situations, those who are really doing substantial work, those who are ready, are those who will always survive. So it's not exactly a new lesson, but those who are well prepared,
reinstated in your mind.
those who have contingency plans, those who are well trained, are really those who will survive no matter the situation. So this is my key learning. We need to be prepared.
And Mushir, your one personal learning that's going to stick with you for a long, long time to come.
Who ate my cheese, right? That one of my bosses, who's a very good friend of mine, had taught us this story. He was a year older than me, and I was a trader 10, 15 years ago, and that taught us a lot. I love cheese, quite very evident in the way I look as well. But the idea there being, I think that learning of the whole idea there being, don't be stagnant, right? Don't be very satisfied with where you are, and that applies both on a personal level and to institutions as well. And from that perspective, I think that's what's kept me going, and the constant hustle to always be looking out for the next opportunity, not because you're greedy or you want too much, but the reality that things don't last, nothing lasts forever. So
Rolling Stones gather no moss.
Yeah, exactly.
And Simone, in conclusion, one personal learning that you'd like to share with us and this wonderful audience that's going to stick with you for a long, long time.
A personal learning, and it actually went back a little further, 2017, with the passages of Hurricanes Irma and Maria, but also applicable to the global pandemic. You fall to the level of your best preparation. If you are not prepared for change, it is extremely difficult. And being curious and prepared, so those BCPs, lots of people have them. And one of the things that I think built into resilience in this part of the world is that we always have to be prepared for the unknown, category 5s, earthquakes, hurricanes, volcanic eruptions, but a pandemic. Some of that learning actually helped a lot of us to be prepared. So we were able to immediately jump on the remote working, people flying to different destinations and the like. So firms fall, not rise, fall to the level of their best preparation.
This has truly been, I couldn't agree with you more, but Simone, Mushir, Stanton, for me personally and for our lovely audience, I'm sure this has been a fascinating conversation where we've learned so much from each of you. Thank you so much personally. I'm very grateful for you having found time. Thank you.
Likewise.
Thank you.
Thank you very much.
Thank you.
Brilliant moderation, Arjun. Thank you so much.
Thank you very much, sir. For the audience, that was all from us from here for this segment. Stay tuned. We'll be back in just a second.